Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. So be out there viewing. Pay attention to the back of the class if you've not been watching my videos. I did one just a couple of days ago. Disregard the guff. Sorry, I'm a couple of minutes late. I just squeezed an awful lot of stuff in the last 5 minutes. Good evening, everybody. Welcome to Moving Home with Charlie. I'm Charlie, and this evening I'm going to show you that compared with getting a mortgage to buy your first home, you can reach outright ownership of a home in half as much time as the average first-time buyer mortgage takes before it's paid off. So in other words, at the moment, the average first-time buyer mortgage duration is 32. It's between 30 and 35 years, but the average is 32 years. And with a really safe, diversified basket of blue chip investments, getting 5% a year return net on your investments, you can accumulate enough to buy the same property, allowing for inflation, within 16 years. Lots of variables. I just did a post on X about this, and it's kicked off a massive stink. And I'm not telling anyone don't buy a home. I just want people to do the numbers first and be sure that they've thought the numbers through. Okay, because the amount of interest you pay when you buy a home with a mortgage is enormous. Okay, roughly speaking, a £250,000 mortgage over 30 years at 5%, you're paying £183,000 in interest if you take the whole 30 years to pay it off. And if it's 35 years, it's even more than that, right? That's £183,000 of interest, just wasted money, just like rent is wasted money. So, like paying rent is pouring money down the drain. Don't disagree with that. But also paying interest is, isn't it? It's the same. It's no different. And actually, if the numbers show that you can, by renting and saving and investing, waste money for half as long, own a home sooner, because guys, the objective is to own your own home outright, right? That's the same. And people have mistaken me. I've been doing a lot of posting on X about this today, and it's kicked up a right old hornet's nest of that's terrible advice. Pay the bank's interest for decades. That's what you should do. Don't own a home sooner by renting and investing intelligently. No. Pay the bank's interest for decades. That's really good, sound financial advice. I'm not giving anyone any advice. I'm simply saying make sure you've actually done the numbers and thought it through. There are lots of pros and cons for renting and buying that are non-financial as well, plenty. And we're not going to go into those this evening. They're all obvious, okay? There are many pros to owning versus renting, and vice versa. There's flexibility in renting, and then if you're renting, there's no maintenance costs. There's no service charges going up all the time. There's all kinds of benefits of both. This video is not about the pros and cons of buying versus renting non-financially. It's about comparing the two options with your own finances, whatever your deposit is, whatever your mortgage offer is, whatever the interest is, looking at the options and going, which one actually makes more sense for us? I still recommend that everyone ends up owning their own home. I still recommend that everyone who's in a position to do so and that wants to buys a home. What I'm trying to do is to stop these glazed eyes first-time buyers who've become utterly fixated on it and have just believed that you can't go wrong if you buy a home. You can't go wrong. You don't own the home when you buy it with a mortgage, right? If you look at the title deeds at the land registry, it'll have the name of your bank and they will have the first charge of your home. It's all, yeah, until the mortgage is completely paid off, the bank effectively owns your home. So I'm not saying, I just want to be really clear here. I'm not saying don't get a mortgage. I'm not saying don't buy a home with a mortgage. What I'm saying is, please do the numbers properly and before you make your decision. And I think a lot of you will go, hang on a second, if the goal is actually ownership sooner rather than later, maybe no. Some of you will be saying, hey, look, we're never going to go 30 years on a mortgage anyway. Our earnings are going to go up. We'll pay it off sooner. Absolutely right. That is the case for some people, not for everybody. But let me just show you these numbers because it really has. There's just even uttering the words that renting might be a faster way to home ownership, outright home ownership. Renting is a faster way to outright home ownership than buying? Well, yes, it looks like it could be. And if you are one of the 50% or so of newly married people who's not going to make it to the 5-year mark or 10-year mark, and you've bought a house together, you might be glad that you rented instead of bought. Right? I mean, again, I'm just doing the numbers. I'm not making any judgments about the quality of your marriage choices. I'm simply saying that 50% of couples who just got married buying a home together gonna get divorced. Right? And if your reason for buying is to own a home sooner than renting, have you actually done the numbers? Right, let me do the numbers. So this is, there are a lot of people going, oh, well, rent costs more than mortgage. So straight away, here is one of the fallacies I need to bust wide open. Not where I live. Where do you live, George? Tell us, by the way. Renting around me is more than what I pay for my mortgage, so I'd have less money to invest with if I rented. Okay. You're not factoring in maintenance costs of the property you own. If you own a leasehold property, you're not factoring in the leasehold, so the service charges on your lease. And you're not factoring in the cumulative totals that you're paying over time. Now, let me get the reviewer makes a point. Yeah, but I can hang a picture and paint the wall on the bank's house. That is true. You can, when you own a property, you can make it your own. Hello, SJ. Finally made it to your first live. Hi. That's not the SJ I think it is it? Right. Let's get this on the screen and run through it. These are rough numbers, okay? So this is, I asked Grok. I asked Grok about buying a £300,000 home with a £50,000 deposit on a 30-year mortgage at 5%. Just rough figures, okay? And I said, how much interest will that cost me? And how much does the property need to go up to offset the effect of inflation devaluing my home at just 2% a year, bearing in mind that inflation is a lot higher than that at the moment. So I'm being cautious. And this doesn't even factor in maintenance costs. And it came back and said £965,000. Okay. So 30 years of inflation, even just at 2%, means it will need to sell at £965,000 to break even, not including maintenance. Now, maintenance, roughly speaking, is going to be 90 grand over that 30 years, plus inflation. So probably more like £120,000. So you're talking about over £1 million. So after 30 years, if you pay your mortgage to term and don't settle it early, you'll have to wait 30 years to own your house. And if it isn't worth over £1 million, you are out of pocket. Yes, you've got somewhere to live, but it has cost you more than doing it the other way around. So this is the full detailed breakdown of the calculations, right? And it works out the mortgage costs, the interest paid. It uses the proper equations and formula to calculate it. So the inflation adjusted total mortgage cost in 30 years is approximately £875,000 on a £250,000 mortgage. Are you hearing and understanding this, guys? Are you hearing and understanding this? Let's just highlight this again. The inflation adjusted total mortgage cost in 30 years on a £250,000 mortgage is £875,000. Okay. So the home's future value in 30 years needs to be approximately £965,000 to break even on all costs, including the mortgage interest and accounting for 2% annual inflation. And of course, everyone knows inflation is much higher than that. Right. I asked the question, if I saved and invested £500 a month in a typically safe basket of diversified low-risk assets such as gold, blue chip stocks, blah, 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 and reinvested the dividends, how long would it take me to accumulate £300,000? And it very intelligently actually works it out with allowing for inflation, okay? And it does all the assumptions saying, let's assume a 5% average annual return, real return, net of inflation, to account for the low risk nature of the portfolio. Reinvesting dividends is standard and factored into the 5% return. Inflation is there. Taxes are, so ISA in the UK, tax-free up to £20,000 a year. Blah, 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 blah. Calculation. The goal is to grow £500 monthly. And the final answer is, with £500 invested monthly in a diversified low-risk portfolio, it would take approximately 18.4 years to accumulate £300,000 in today's pounds. In other words, adjusted for inflation. And if it's nominal, it would just take 16 and a half to 17 years. Okay, so 18 years, which is slightly more than half of the 35-year mortgage. So, do you see what I'm saying here? You can nitpick about the specifics, right? You can nitpick about the specifics. But there it is in black and white, right? With very modest returns on low-risk investments, you could save up enough to buy a place outright. And the point is this, right? You don't have to go to work to earn after tax £183,000 to give to a mortgage lender as their profit on lending you money. Okay, so based on those two rough examples, you could own a house outright much faster by renting and investing than if you bought a house with a mortgage and took the full term to pay off the mortgage. All right. So, guys, I haven't done stuff like assumed rental costs. It's in each scenario, you have somewhere to live. Everyone is going to make a different decision about if they're renting to live while they save up. Some people are going to rent a nicer place and have less to invest. Some people are going to, right, let's rent cheap and invest faster. That's all down to personal choice, okay? But when you're renting, even if the rent is slightly higher than the mortgage cost, you don't have to pay service charges or maintenance costs, okay? Or fees. So there we go. That was the point. And please do not think I'm trying to put anyone off buying. I'm not. But I want to bust open the myth that buying with a mortgage is the fastest way to owning outright. It's just not true. It's just not true. If you rent and don't save and invest, you will never have a home to live in that you own outright. That's obvious. And I'm only talking about renting versus buying a house, assuming that you're going to, of course, save and invest what you're not spending on maintenance, mortgage interest, and service charges if you own a leasehold. Guys, there are a million what ifs, right? There are a million what ifs, but I'm just roughly comparing apples and apples here. And if you want to own a house, then go and buy a house, because there are people who want the certainty of not being evicted by a landlord. That is a compelling reason to buy rather than rent. I get that. Right? But there are people who have great landlords who've got no plans to evict them and no plans to sell up, and you get a great house with a great landlord at a fair market rent, and you go, just stay here. We're flexible. We can roll with whatever changes and curveballs come along. And on the post on X, let's just go through some of the comments, because some people got really, really cross about this. And this is, by the way, guys, if you don't follow me on X, you really should. It's where I do 90% of my non-video posting is on X. Paris H says, looking at it purely in an economic lens, though, isn't the best, in my opinion. Having a home where your landlord can't kick you out and you can have peace and money, you can't buy that feeling. Agreed. Well, I mean, you can buy that feeling. You buy the home. So you have bought that feeling. And this is what I'm saying. I'm not talking about the non-financial reasons, and I'm not saying people shouldn't buy. But what I'm saying is, if people are focused on outright ownership sooner rather than later, maybe not for everybody, maybe not everyone's situation, but again, if you can't afford to buy a home now because you haven't got a big enough deposit, just bear this in mind. It might alter your strategy completely, okay? If you start saving and investing the money you're already saving, investing for a deposit, but keep going and do it a bit faster, you might be in a position to buy with cash sooner than you thought. Especially if what's going to happen to house prices happens to house prices that I'm expecting. Oh, George, you say you're in East Devon. I know East Devon. I'm sorry, George. I don't know what level of market you're talking about, but renting in East Devon is not that expensive. I thought you were going to say London or something. Where did you say to send your stories of buying or selling to? You can put them in the comments on YouTube, but direct message on X or on Instagram, or email charlie@mhwc.co.uk. I love all your stories, please. Love to have the stories. So I was going to go through some of these angry reactions to what I'm saying. Here we are. Horrendous financial advice, says somebody. There is no financial advice. Someone tell me if I'm wrong, right? I haven't given any financial advice. I'm raising awareness. That's all I'm doing. I'm raising awareness of an alternative approach. I'm not telling anyone what to do. Horrendous financial advice, says Mithras. And someone here says, Fred's grandson says, drivel. My house tripped in value, but I think he meant tripled in value in 6 years, 97, 2003. Yes, but Fred, the flaw in your argument there, mate, is that it's not 1997 anymore. And if it was, things would be very, very different. Because as we all know, those of us who bought in the mid-90s did very, very nicely on our property prices. I mean, you could be an absolute plank and make a fortune if you bought property in the mid-90s. I'm living proof. Lots of people don't like the concept, but no one has come back with the maths and said it was different. Yeah, maintenance costs are absurd. This is the other thing. I need to show you this video that some of if you haven't seen it, right? This video from a buyer. Am I going to find it? I'm going to find it. There was someone on TikTok, and I posted the video myself because it was just such a compelling thing. Basically saying that here it is.
House, because I just got my mortgage statement through, and we still owe £167,000 on our mortgage. We're 37 and 38 years old. That is so depressing. But what's more depressing is that if I sold my house, I would have about 200 grand. But yeah, it's just sitting in my house. It's sitting doing nothing. Surely there's got to be better use for that money than just sitting there. I think we're all conditioned to think, aren't we? Buy a house to have money to give to our children. But that's not usually the case now, because you've got to pay for your care. You know, if you live into your 80s, your kids are going to be in their 60s. Do they need the money? Probably not. They need it earlier. This is how my brain works. I get these times where I'm just like, what are we doing? Why have we done this? People take the mick out of, you know, people living in council houses and stuff, but I think they got it spot on. Absolutely spot on. If I could have got a council house, I would have got one. I would have snapped one up. Because not only have we got to pay all this money, probably not going to benefit from the money other than care when we're old, but we've got to upkeep our house. My husband's literally downstairs now sorting out our porch, decorating the porch. We've had to renovate this whole house because all we could afford was to buy a house that needed renovation. This is our second house that we're renovating. The amount of money that we put into this house so far give you nightmares. And my husband's a builder, so we can do it cheap. It's a money pit. It's a money pit. You think you're done, and then you have to start again. This is, like I say, this is the way my brain works.
There you go. Right, that's someone you can tell speaking from the heart about the money pit of renovating houses that no one factors in. Anyway, do we have questions, guys, on this? First of all, if anyone thinks that I'm giving advice other than to consider all your options, please explain to me why. Because there are people on X going, this is terrible advice. I said, what? I haven't given any advice. I've just given an example of something. Jason says, well done for covering this. Stuck your head above the parapet. This is the exact decision I'm weighing up now, especially with the state of the UK now. Charlie, lots of forums online are calling you a Russian asset. Really? Which ones? Please give me a link. That's fascinating. I've got to see that. I don't understand. Yeah, XL28 says yes, but it's still equity. Equity in your house is not equity that you can use. And it's equity that, like a lot of people have found in the last 5 years, can get eaten. It can get consumed and shriveled up. If you've got your net worth not tied up in your house, you have flexibility and options, and you can move it if you want to, and you can do other stuff with it if you want to. Yeah. All right, guys. It's just a quick one this evening. I'm also, I know I haven't had guests on for a long time, and I do have to have guests on again soon. I've got lots of guests I'm going to have on. There's an awful lot going on, especially with Best Agent, my property site. And I would like to actually remind everybody what I'm doing with this and why I'm preparing to bring something to the market that's going to challenge the current property sites by offering a completely different experience. With the goal is not just volume of bad leads and wastes of time. The goal is shorter transaction times and better value for money for people who are well prepared, and fairer, more transparent housing market. right? This is the whole thing. Roni Bomix says, question, Ford Mustang V8 or deposit for a house? Which is a better option now for a single man, no family, no kids, good job. Well, you can't drive your deposit around, can you? With the roof down sounding awesome. Yes, anyone who's been holding gold in the last year or two has done very well. When is Best Agent finally out of beta? That's a good question. There's a lot happening that's very exciting behind the scenes. That I can't wait to let you guys know about with Best Agent. It's coming along. I'm just having a quick look at it now. I don't promote it much on here yet because it's just a little bit too early to really be doing the exciting things I want it to do. But I know that it's going to do well because it's a lot of people are feeling very, very threatened by it. And you're over the target when you start taking flack, right? What else do we have? Stephen Simmons says, when Best Agent is up and running, can regular Joe public add their buying and selling and purchase prices? You can already do that. So the Best Agent public house price index, I will show you. And there are some of you doing it already. I'll put the link in right here. The trouble is, not enough of you doing it to actually make it a usable index yet. bestagent.property/HPI. And this is what you'll see if you go there. And this is live, but it's pending basically the, and this is where you click get started and you just start reporting your price. And you say if it's a new build or not, and you put in whether it's sales or lettings. We're going to be reporting sales prices and lettings prices, freehold, leasehold, or don't know, etc. So that's how that works. So that's working. That's working now. And what will happen is that when we start to get everything fired up properly, we'll be collecting exchange prices from lots and lots of agents and from conveyancers and from everyone who wants to contribute. And we won't need to get very many in order to have a sample size larger than the land registry or the ONS uses when they publish their house price bulletin. And we will provide full granular data, so you'll be able to scrutinize what we're doing. My only goal is transparency. Okay, there isn't any transparency. I was looking into why HMRC doesn't publish house prices, even though it has 100% of house price transaction data from 2 weeks ago. And the only reason they give is, oh, well, it's privacy. But what you mean, the data that the land registry publishes a few months down the line, which is exactly the same, and you don't even have to give that level of data, just prices is all you have to give, right? No, privacy. That's the reason. It's such horse shit. There's nothing to stop them publishing the house price. They haven't got to publish every single last address. They don't need to worry about personally identifying information or GDPR. They could just publish a price data set, but they won't. And that is what I want to bust with Best Agent. I want to bring proper transparency to the housing market. Our goal, I've even got a little flyer here because I'm in the middle of just doing fundraising, right? And our goal here is a transaction platform targeting 4-week sale time. So 8 weeks total from your house going to the market to completion, 8 weeks. And a home for everyone. And I've got some really exciting people joining, looking to join the board. Actually very exciting. I have today been in communications with a very high profile, very famous, very highly respected figure that many of you will know. He's a TED speaker. He's on a lot of podcasts and he's a bit of a genius. And I've got a call with him coming up about potentially helping out with Best Agent. It's very exciting. Little Carol says, isn't paying a mortgage the same as renting a house to yourself? Kind of. You're really renting it from the bank though until you've paid them off. Markets can stay irrational longer than we can stay solvent. Honestly, unless you are a really seasoned trader, not an investor, a trader, the only safe thing to do in the last few weeks when the markets have been in turmoil is to just sit tight. No, it's not Phil Spencer. It couldn't be. He's a paid shill for the industry. He's got a puppeteer's hand up his arse telling you everything's great in the housing market, says Spill Fencer. Everything's great. It's just great. It's all great. He's sponsored by a lot of the organizations in the property industry, and therefore he has to dance to their tune. Whereas Evan Davis said, I take their shilling, they make the rules. And I don't take anyone's shilling, so I can say what I want to say, which is the truth. Oh dear. I'm a sucker for a good pun, and triple bypass is making me laugh. Right, guys, I'm going to call it. Unless there are any questions I haven't answered. Does anyone have any questions for me? Hello, Trish. By all means, guys, if you are looking for a home or an agent, try out Best Agent, bestagent.co.uk. It's live, it's working. It's just a lot of the features aren't yet working, and they will be before too long. Carlos asks, would I please consider a future stream looking at mortgage versus cash buying, pros and cons, etc.? That is getting to the area of financial advice, which I don't tend to do. But basically, I would always buy cash on a property. People go, well, yeah, but you could invest the cash somewhere else and buy the mortgage. And yes, there are leverage options. And again, I could talk about that, but that's not my my niche. So I'm not gonna go there. Dan says the benefit of not buying has now given me a choice to move around and probably start my business. Yeah, a lot more flexibility. And like, this is the thing, right? Life is so uncertain that when you take on the burden and the commitment of a very long-term mortgage and being tied to a property in one place, there are people who have lives where that is exactly what you want, and that's great. But there are people who actually, it becomes a right old millstone around your neck. If interest rates go low again, then mortgages become a good choice, asks Bozboz. But just, you've got to run the numbers again when you see whatever the mortgage interest rates are. And everyone's numbers are unique to them. Okay. All I've done this evening is a very, very rough comparison of a 300 grand house versus saving up 300 grand. That's all I've done. Really, with a 50 grand deposit. I mean, actually, if I put it down as a 10% deposit, a 30 grand deposit, and a £270,000 mortgage, it would have even stronger. Don't do it. You'll buy it faster if you save up the money and invest it until you can buy cash. Yeah, that's true. People who locked in 10-year rates during COVID are winning. That's very, very true. That's very true. But again, I mean, they borrowed. Bozboz, don't forget, they bought high, right? If they bought in 2021 or 2022, yes, they got a low fixed rate, but their value of their properties could probably come down. Right. I hate leaving you all, but I'm actually genuinely surprised at how little challenge I've had here. I was expecting to get lots of angry challenges from people going, "You, it's all wrong." I'm really surprised. Really, really surprised. Aren't there people watching on X? Because I know I'm live on X right now. I know I'm live on X right now. Is there no one watching on X who thinks this is terrible advice? The advice that I'm not giving. Am I live on X right now? Yeah, I'm live on X right now. So if you're watching on X and you're one of the people who thinks that this is absolute rubbish and that you can't possibly save up to buy a house in half the time it takes to pay off a mortgage, if you just think about it, right? On the one hand, if you're saving and investing, you are keeping 100% of the proceeds of your savings and your investments. Whereas if you get a mortgage, you are paying hundreds of thousands of pounds in interest. And interest is just, I mean, yeah. When it's very, very low, it's great for leveraging stuff. I get that. But yeah. All right, guys. Now remember, if you are buying with a mortgage, and I hope those of you who want to can and are doing that, what I'm hoping is that this evening's video might make you just rethink about the importance of not overpaying. Okay. Because one of the biggest problems the country faces as a whole, economically, not just in the housing market, is housing affordability and the fact that people can't afford a decent quality standard of home on median wages. Okay, and I'm really hoping that continues to improve. Affordability has been gradually improving in terms of the house price to wage ratio. Unfortunately, interest rates going up have offset that, but it is house price to wage ratio has been improving as real wage growth has remained positive, and real house price growth is still negative. Not a single, well, very few papers report this. Actually, the Telegraph and the Express did report it. I did a video on it a couple of weeks ago saying that there is like a hidden house price crash. But it didn't get much coverage, amazingly. I thought it would get headlines, but no. Guess what? The editors of the big rags don't want you to know that house prices are going up slower than inflation. In other words, they're devaluing. So currently, all of you buying homes are buying a depreciating asset once inflation is taken into account. Don't shoot the messenger. I'm just saying inflation is still going up higher than house prices. But Charlie, the ONS said it's going up at 5%. No, it's not. They revise it down, and that 5% figure is an unrevised figure compared with last year's revised down figure, which creates a disproportionate upward slant in their year-on-year growth figure, which is bollocks. Big fat hairy plums, because all of the other indices are saying 1.9% or 2.3%. Even Halifax and Nationwide are in the 2% area. Rightmove is down at 1.3% year-on-year growth in asking prices. You know, the ONS is just fantasy land. And then they revise it all down. They don't tell anybody. So yeah, if you are going to get a mortgage, you must speak to a whole of market independent mortgage broker, because they have access to products with different terms and conditions. Never mind the rate. Don't just focus on the rate when it comes to your mortgage, right? If you think that's the only thing that matters, go to a comparison engine and get the cheapest mortgage, and don't even think about all the other conditions of the mortgage. Like, is it portable when you move home in a few years' time? What are the early repayment penalties? What are the other conditions that happen? There's so many different things, different conditions with mortgages, right? Talk to an independent whole of market mortgage broker always, and make sure you find a whole of market broker that you actually trust, not one that wants you to come back every 2 years so that they can cash in their nice commission for reorganizing a mortgage for you every 2 years. There might be times when 2 years makes sense, but generally speaking, those are teaser rates and it's going to bite you later on. So, but if you can't find a mortgage broker you can trust, talk to my guys here. mhwc.co.uk/mortgage. And if you're selling, conveyancing, get your conveyancer lined up first. I do know that a lot of my new followers get very, very confused. They kind of expect me to be a typical property market shill going, just quick, you can't go wrong. House prices always go up and you should just borrow. And I'm not that guy. I'm the opposite. I'm like, yeah, buy with a mortgage by all means, but just don't overpay. Do it intelligently. Don't assume that it's going to make you money because it isn't anymore. But if you want a home and a secure home, then of course it's a good thing to do. And I'm here to help you navigate the minefield snake pit that is moving home. Yeah. Liam Jennings says, do you think we're going to have the 3 rate cuts this year? Well, before I even answer that, what I would say is don't forget that we had rate cuts last year and mortgage rates didn't come down. I do not have a strong opinion. My only confident opinion is that uncertainty levels remain high and there is major instability in the financial system as a whole, but that there is a concerted effort to paper over the cracks and make everything sound like it's not too bad. They don't want to panic the sheep, basically. Whether that means rates going to go down or not, central bank rates going to go down or not, I don't know. I just don't know. There are people saying that there's going to be deflation or disinflation. I've seen there's just uncertainty is rife. I have no idea. There could well be 3 rate cuts this year. There could be none. There could be rate increases. I just don't know. It depends. I have a nagging feeling that something unsettling is going to happen this year, and that the dam that's been cracking and leaking, the dam's going to break at some point in some way. So I don't know what's going to happen. I really don't. It's been lovely, guys. Thank you very much. I hate to leave so many of you hanging on, but with the absence of questions, just reading some of the comments here now. Yeah. Right. That's it. I'm out of here. And also, guys, don't forget, if you are buying, get your property search pack here as well and offer it with part of your offer. And if you use my offer email template, my first time buyer or my cash buyer offer email template, make sure you've got everything lined up, including your property search packs. And what you should say is, I will order the property search pack the day you accept my offer, assuming, Mr. or Mrs. Seller, you have your conveyancer already in place, which you should if you're a seller. And if, as a buyer, your seller doesn't have their conveyancer as instructed, you should say, I will order the property search pack as soon as your solicitors send my solicitors the paperwork for the transaction. Okay, so as soon as they send out their initial paperwork on the property, that's the day in which you should order the property search pack. And if you do it through me, by the way, if a conveyancer tells you, oh, no, you have to buy it through us, that's not true. You don't have to. They are required to accept these. These are all completely authorized and certified search packs. If you do it through me, your solicitor and you get the search pack at the same time, which means that you don't have to rely on your conveyancer communicating to you that there might be a problem in the search pack results, for example. How long have I been saying I'm going to go now and not gone? It's about 20 minutes, isn't it? That's a nice one to end with. Cedric Power says, remember to overpay if it's a good property. Peace, everyone. Absolutely. All right, guys. Have a good one. Bye-bye.